Axis REIT Q2 2026 dashboard drill down. We're seeing some serious warning signs flashing, so let's jump right into the numbers.
Boom, right off the bat, here's the biggest shocker. Axis REIT's Financial Moat score just took a hit, getting downgraded from a solid 7 down to a 6.5 out of 10.
And honestly, the downgrade makes total sense when you look at the bottom line. Realized net profit took a noticeable dive, dropping to 46.5 million ringgit. That's a steep 9.9% drop year over year.
Naturally, that earnings softness hits investors right in the wallet. It dragged the Q2 distribution per unit, or DPU, down to a mere 2.30 cent.
So where's the bleed coming from? Well, the first major symptom is portfolio occupancy, which has slipped to a somewhat concerning 93%.
The pain is definitely regional. We're staring down some massive vacancies in specific hotspots, namely the Bukit Raja Distribution Center sitting at just 58% occupied and Shah Alam at a worrying 49%.
Beyond empty warehouses, we've got some heavy operational headwinds. For starters, a massive 105 million ringgit legal battle with former tenant Yongnam Engineering has basically hit a brick wall.
Axis REIT actually won a judgment, but liquidators just rejected 82.7 million ringgit of their claim. That makes actual cash recovery highly doubtful right now, and it's forcing a court variation in October 2026.
On top of that legal headache, a severe fire at Wisma Kemajuan back in February means a complete and total suspension of rental income from that property. The silver lining here? Insurance. It covers the rebuild and up to 24 months of lost rent. The catch, though, is those claims aren't going to hit the books until the end of 2026.
When you stack up all these operational headwinds, it perfectly explains the steady price decline and the mounting investor anxiety sweeping through the market. But hey, it's not all doom and gloom. There is a major lifeline in the works. Axis REIT is sitting on a massive 456 million ringgit growth and development pipeline.
This isn't just a big number to throw around. It's a very clear strategic roadmap aimed squarely at a huge earnings recovery in 2027. We're talking major new facilities rolling out from late 2026 through the first half of 2027.
The absolute crown jewel of this pipeline is the 113 million ringgit acquisition of a freehold industrial complex in Padang Meha, Kedah. Slated for completion in Q1 2027, this asset is a beast. We're looking at over 340,000 square feet, fully tenanted on a secure 6-year master lease and yielding a rock-solid 6.6% with contractual rent step-ups. It is the ultimate catalyst to offset their current weakness. If they can survive the tight cash flow and legal write-offs of 2026, analysts project this pipeline will completely turn things around, catapulting realized net profit to over 220 million ringgit in 2027, with a DPU pushing past 11 cent.
But to really understand exactly how their 1.8 billion ringgit debt structure impacts this 2027 recovery, you need to watch the full 37-minute deep dive on YouTube right now. Will Axis REIT successfully cross this financial bridge, or will the massive debt load drag them down before they get there? Head over and find out.